This morning, I know this is going to be a very interesting topic. And this is the issue and the burning uh, um, areas that everybody wants to know about. So today is not for me to talk, the experts are here. So I suggest what we'll do, as we've done in the past, I will give you a very brief overview of them and then we'll get into individual presentations. So we do have with us Mr. Michael McNaughton, Mr. Kevin Hewitt, and Mr. Kevin Butler. And what we will do, we will start with the presentation. So I will invite first Mr. McNaughton, but I will give you a brief intro as to who he is, and then hopefully at the end of the presentations we'll have time, if possible, for question and answer. Is that okay? All right, so let me start with Mr. Michael McNaughton. All right, we'll start with Kevin. All right, so IT, I hope you have Mr. Kevin's presentation on standby. So Mr. Kevin Hewitt, Kevin, sorry. We're going to start with Mr. Kevin. All right, so Kevin Butler. Kevin Butler. So there are two Kevins. One is Kevin and one is Kevin. So just make sure I get that one straight. So Kevin is an associate professor of computer and information science and engineering at the University of Florida, where he leads research in computer system security within the Florida Institute for Cybersecurity Research. His work focuses on the security of systems and data with a concentration on storage and embedded systems, mobile security and privacy, and cloud security. He also has interests in internet security and applied cryptography. Kevin received his PhD in computer science and engineering from the Pennsylvania State University in 2010, an MS in electrical engineering from Columbia University in 2004, and a BSc in electrical engineering from Queen's University at Kingston in 1999. He received the National Science Foundation Career Award in 2013 and the Semantic Research Lab's Graduate Fellowship in 2009. Kevin is the conference chair for the 2017 IEEE Symposium on Security and Privacy and a vice chairman of the International Telecommunications, the ITU's focus group on digital financial services. Please put your hands together and welcome Mr. Kevin Butler.
How much time do I have for the talk? 20 minutes?
So much.
20? Okay. I'll try to keep it moving then. Good morning, everybody, and thanks for being here for the workshop. You heard VJ talk yesterday about the role of ITU in defining the DFS space, and I'll talk at the end of the presentation. Actually, since this work started, I've been involved in the ITU efforts, and I'm leading the security. I led the security work stream within the TIC working group. So some of those recommendations came from us. But this work that we've done in our research group laid bare to us some of the issues that we ended up talking about with ITU and helping move those recommendations forward. So mobile money is revolutionary. There's no doubt about that. M-Pesa in particular, was the original mobile money service, bringing basic banking services to the unbanked rural and the urban poor. And this model is being repeated all over the place, both in the developing world and in more developed countries as well. Currently, over 270 deployments of these systems. Some countries see, in Kenya in particular, as much as 30% of the GDP is spent through mobile money systems. And I just saw recently that Tanzania has a similarly high amount of equivalent GDP going through a mobile money system. So they're very important to the population. We've seen the benefits of them. I think yesterday we talked in detail about the benefits that they bring. There are challenges involved in them, though. And so what I'm going to talk about today is the challenges with smartphone-based mobile money applications and their security. So feature phones and 2G cellular networks have significant security problems. I'm not sure to the degree here in the Caribbean where to which there you see significant feature phone usage, the Nokia candy bar phones, etc. There are a lot of reasons why people like having feature phones. Despite their relatively limited functionality, their battery life is great. You can have them charged for a week. That can be important, and the cost is still a major differential, although the cost of smartphones is coming down. The downside with the networks that feature phones run on, and general GSM networks, is that they have problems, including eavesdropping and weak cryptography, and we'll talk about those in a couple of minutes. The move to modern networks and smartphones offers great opportunities to improve the security of these systems and of mobile money ecosystem in particular. So the question that we sought to answer was, are the security practices of DFS applications any better when looking at smartphone-based mobile money deployments? So to say a little bit more about what makes first generation, in other words, feature phone and 2G systems difficult, is when we think about how feature phones connect to services through the cellular network. So when you connect on over a 2G network, there is encryption. There's GSM encryption between your mobile phone and the base station. But once the information hits the base station, it is sent completely in the clear from the base station through the provider network to whatever services you're coming through. So any adversary who is able to interject themselves somewhere within the provider network, for example, an insider, will be able to just pick out data that is sitting there in the clear, in plain text. There's no encryption. Furthermore, with regards to the encryption between your mobile phone and the base station, those are based on GSM ciphers that are known to have weaknesses. And in some cases, depending on the cipher that's used, there's no encryption whatsoever, and that can be mandated in certain countries. In other cases, the encryption ciphers are known to have vulnerabilities and can be broken in a matter of minutes. So relying on that as the basis of the security of your data, especially financial data, is problematic at best. Now, smartphones offer something different because of the fact that these phones are more powerful, they've got more processing capability, and if you're using, for example, an Android phone, then you've got libraries on there that allow for the encryption of data at the phone. This means that information can be sent in encrypted form all the way from the phone itself through the network to the mobile money server or to your financial service. So we have the potential here for end-to-end encryption, meaning that an adversary doesn't have the ability to eavesdrop on those conversations or to modify them and tamper with your transactions. So this is potentially a great benefit. Now, the security guarantees that we found with the systems we looked at, here's some examples of ad copy that various mobile money providers have given. So buying digital contents without risks, MPay, which is another application, Oxygen Wallet, which is, if I recall correctly, and one of the solutions that comes out of India. The type of guarantees that they offer are a little difficult to understand from a security standpoint. For example, Oxygen Wallet claims to be built with multiple levels of security and designed with anti-hacking codes. I'm not sure what an anti-hacking code is. Similarly, MPay also is high security and uses double lock security. I don't know what double lock security is either. It's not a term that is generally used in the cryptography or security community. It's easy to pick on advertisers, sure, but it's what does this actually mean in terms of the securities of these applications? So in order to find out a little more in more detail, back in February of 2015, we looked at all 46 mobile money apps that were available from the GSMA's tracker. And we looked at them with regards to application security, server-side practices, and the policy. And we looked at, in more detail at a cross-section of these applications. 7 of those in detail we took a deeper dive into. We did some automated analysis using on deployments. All of the white stars in this map show where we use the automated tools, and then we did a deeper dive with manual analysis on applications that are in the black stars. Those are the countries that were represented. So we wanted a cross-section of deployments from around the world of differing size and different thing to get a sense of the overall environment. With our automated analysis tools, we found that almost half of the apps that we looked at had critical vulnerabilities in the way that communication security was done. When you have security over the internet, you usually use a protocol called TLS, Transport Layer Security. When you see the lock icon in your web browser when you're going to Amazon or to wherever else, that lock means that you're using TLS. It means that your protocol is being, or your information is being protected by a secure protocol, which is ensuring that people can't eavesdrop on your data and can't tamper with it. And there's some strong cryptography going on underneath. But we found that, again, half of these apps had a critical vulnerability in the way that they used this secure protocol. The downside with automated analysis is that it's possible to have false positives and false negatives. In other words, we think that there is a problem, and by looking at the app, we see that a problem exists, but it's not always clear. For example, if there's a branch of code where there's a vulnerability, by just looking at the app through automated tools, it's not clear whether that branch of code is ever going to be executed or not. And this is a failing of current automated apps. So that's limited. The only solution that we have to really be able to look and see what's going on is through manual analysis of those apps. And that's what we did, is that we actually broke down these apps and looked at them line by line to find out what was going on with them. We looked at 7 apps representing over 1 million users worth of DFS. And we looked in particular at the way that registration and login routines were done, the way that user authentication happened, and the way that money was being transferred. So we looked at the following 7 apps. These are the 7. Again, they represent 3 from India, 1 from Brazil, 1 from the Philippines, 1 from Indonesia, 1 from Thailand. Now, for the technical folks in the room, I'll keep this part short. In case you're interested in what we did, we actually reverse engineered the apps. We found them on the Android market. We reverse engineered them and were able to take them from the binary Android package, the APK, and turn them back into bytecode and then into source code that we could analyze from there. So we used a variety of tools we did to do this. This actually represented in itself an enormous amount of work because some of these apps were obfuscated, and we had to de-obfuscate in order to get the source code back. So the good thing is that it ensured that our results were conservative and that we were actually testing live code. Now, what did we find? We found that 6 of these 7 apps had easily exploited critical vulnerabilities. In other words, we found it would be trivial to steal users' credentials, to steal their payment history, and to fabricate or modify transactions. In other words, we could potentially steal money from customers with the vulnerabilities that we found. We found over 28 vulnerabilities across these 6 apps, representing 13 different categories in the common weakness enumeration. So the types of vulnerabilities we saw were in terms of the way that TLS was being used. That's that secure protocol that ensures that your data is secure. The use of non-standard cryptography, which turned out to be very bad in many cases. Insufficient access control, and general leakage of information. So so on the client side, in other words, what's happening on the smartphone itself is that Android has got libraries in it that allow you to do validation of TLS. It allows you to securely handle protocols. If you follow the guidebooks, all of that is in there, and if you do things the default way, then you'll have correct validation. What we found was that 4 of the 7 apps overrode those certificate verification routines. Possibly they were getting warnings when the developers were doing their testing, and rather than figuring out the source of and this is conjecture, we don't know for sure, but it seems likely rather than dealing with the warnings. They just overrode the verification routines and did their own thing. So that's problematic, because if you get it wrong on the client side, then it's going to be wrong all the way through. It means you've got a weaker system. Now on the server side, we found that this is the phone is the client, and then they're connecting with the service. And on that server side, we saw that many of these apps were vulnerable to known attacks against TLS. So certain well-known attacks that you might have heard of in the news, like Poodle, you've probably heard of Heartbleed. Poodle is similar in some ways. A couple of these applications didn't use security at all. There was no secure communication. And some used old and deprecated cryptography. So I'll give you just two examples of what we saw in terms of the way that what we call do-it-yourself crypto was happening. In the case of Airtel, we found that this is how encryption, this is your encryption key for your mobile phone. What we found was that every single encryption key, this string of code was hard-coded into the app. So every single key had this piece of hard-coded information, plus the phone number of the user, plus the user's account number, and that's your key. So if you know anything about the user, for example, their phone number, their account number, and then since this part of the key is the same for everybody, you've got their encryption key, and now you can go in and decrypt all their stuff. Furthermore, because this data was all protected by weak cryptography, you could have gotten this information during the registration routine, because you could have just decrypted based on the weak use of TLS. So recovering this key is not difficult for a determined adversary. The key is used to encrypt the user's PIN, which is used to authenticate with the service. And again, all of these fields are broken because of previous messages. So we can essentially take control of this account. Now, this other system, Mobile on Money, this is a particularly interesting case. All messages were sent over plain text, HTTP. In other words, no security protocol being used. They created their own security system. The way this security system works is that when you want to register, you as a user are going to send your key, the key that you want to use, is going to be sent in plain text, in the clear, to an encryption server. And the encryption server is going to respond with your key attached to an encrypted version of your key. And that's what you see. And then you're going to take the encrypted version of your key and send that to the registration server. In other words, if you sniff the first part of this transaction to the encryption server, then you're going to see the key, because it's sitting there going over the air in plain text for anybody to see. And even if you don't get it there, on the way back, they helpfully give you the plain version and the encrypted version all at once, so that you can see it that way. And that's the way that encryption worked for this system. So this is the only cryptography used in this application. So, this is entertaining. The downside is, who takes the fall for this? These systems fail to safeguard user data, their confidentiality, and their transaction integrity. When we looked at the terms of service for each of these applications, we saw that in every case, the user is responsible for all transactions. The assumption is that the user has the PIN, and if the PIN gets lost, or if somebody else gets the PIN, it must be the user's fault. And there's no recourse for you as a user if somebody hacks your app, steals your PIN, and takes your money. There's nothing you can do about it, because the terms of service say it's all on you. So when these systems are attacked, the user pays the price. Now, we published this work in 2015 at one of our major conferences in security. We'd gotten a lot of, we'll talk to you later. We're not really interested. And then the Wall Street Journal picked up our article, and all of a sudden people were a lot more interested in talking with us. We thought we were making progress. We started engaging with the ITU around that time. They'd heard about the work through the Bill and Melinda Gates Foundation, and we started getting involved. And so we thought we were making progress. So we wanted to see how we were actually doing. We evaluated whether developers were now making better security decisions a year after the paper was done. So we went back to the GSMA tracker, where all of these mobile money applications are listed, and we saw that there are now 271 companies, of which 49 have Android applications. We again did some automated analysis, and then we did manual analysis on 6 of the 7 analyzed apps. One of them, Zoom from Brazil, was actually pretty good. So we didn't include that one because there weren't a lot of major vulnerabilities we found. So we looked to see whether these apps overrode the methods of turning off authentication and overriding other methods of TLS. In 2015, when we first did the study, we found that 20 of the 43 apps appeared to have this vulnerability. In 2016, after all of this publicity, exactly 3 of these applications fixed their issue. The others remained vulnerable. So in fact, it's surprisingly, if you look at the Android market in total, about 8% of applications have vulnerabilities with their security protocol. So there are actually more vulnerabilities in the DFS space than there are across general Android applications. So that's a frightening thought. Now on the back end side, we ran tests to look at the safety of the servers, and what we found is that 44% of these applications were speaking to domains that were set up in a highly vulnerable way, or that didn't support secure protocols at all. So this is again very problematic. A test called Qualys allows you to look at your security against different attacks against the TLS protocol, and if you score an F, that's not good. A lot of these did. So we revisited the apps that I talked about earlier, and our main findings were, and unfortunately this didn't come out so well, and it'd be hard to see anyway. We wanted to ensure too that sometimes apps, they get deprecated, they get obsolete, they're no longer alive. We found that all of these apps were being worked on. In fact, we'd been in communication with these companies. We told them the vulnerabilities we found, where to find those vulnerabilities, and what was going on. And they said, most of the time, yeah, we'll fix that. In fact, Money on Mobile was particularly grateful for the findings that we had. So these apps were being worked on. We found in many cases as much as 90% of the app had changed in terms of its code base. However, all of the vulnerabilities that we found in those apps in 2015 were still there a year later in 2016, including this use of the encryption server on Money on Mobile after we'd given them detailed instructions on how to fix their code. So we're not trying to tell people, do expensive fraud detection, do a lot of stuff that's going to be very complex and difficult. The things that we talked about have known fixes. Things like bad server configurations or bad use of cryptography that can be changed with a couple of lines of code. So we can't do this alone as technologists. This was our takeaway from all of this work. In many ways, when we look back at feature phones, we thought that feature phones were vulnerable, and they are. But in answer to the question of the security practices of DFS applications any better with smartphones, in many cases, the answer is no. The barrier for entry of attacking legacy systems is higher because you have to actually have a way into the network, and whereas with smartphone attacks, you only need a laptop. So while it should be easier to secure these apps, in many cases the overall security is worse. So what about regulation? Many countries have modified their financial regulations to make it easier for mobile money systems to operate. The Reserve Bank of India has an illustrative framework that is 12 pages long. And that's the extent of the regulation. As regulators, you've probably seen that the table of contents in your regulations is usually longer than 12 pages. So there's not a lot to go on. In fact, many of the worst offenders fell within the letter of the guidelines of RBI. So let me just finish by saying one more thing. This is work that we're currently doing right now in terms of the privacy policies of these apps. We looked at 54 mobile money applications. We found that in terms of what they're doing with regards to privacy, 44% of these apps don't have any privacy policies whatsoever. Of the ones that do, they're often not written in the main language of use in the country where they're deployed, and half of them, the ones that have a policy app, don't actually identify to the user what data is being used and what data is being collected. These are examples of actual entireties of privacy policies. The first one is for Econet Wireless Zimbabwe, which is committed to respecting the privacy of your data. And they've created this security and privacy statement, and that's the statement. It doesn't actually tell you what they're going to do. It just says that here's a statement, we have a privacy policy, this is it in its entirety. Tigo, which is a very well-known name, especially in sub-Saharan Africa, this is the entirety of their policy, and it itself is very short. So the takeaways are that this is an area where it's very important to get security right. If you don't have security in your systems, then you're not going to have confidence. Then the consumers aren't going to have confidence. All it's going to take is a couple of well-publicized major breaches to shake consumer confidence. And the worst thing that you want in a financial system is for a breach of confidence from customers. So poor security combined with liability models that hold the users almost entirely responsible for losses place the mobile money experiment in jeopardy. And best practices are possible as a way of helping, but the state of the art still has a way to go. And as we found, this is going to be something where technologists, regulators, industry are all going to have to come together to ensure the security and overall the vitality of this ecosystem. This is some of the work we've done. We have a journal version of our original work coming out, and the privacy work is under submission now. So hopefully I'll have a peer-reviewed publication to point to very soon. Thanks very much.